All right, traders, good morning. This is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you all and happy Tuesday. Today is Tuesday. I don't know if we're going to get much of a turnaround Tuesday, but it's Tuesday anyway. Matter of fact, I don't know if you guys have seen the DAX. The DAX is above 10,500, which is a big rally mode. I mean, I've been looking for a reversal here in the DAX, and we are actually breaking higher. So we're trying to anyway. You can see the DAX just, we had this ascending wedge. We came down, but now we've reversed into highs, and it looks like the DAX might actually break out. But you got to watch obviously how the day ends, because we're above this resistance right here. But it's looking pretty good, and risk appetite's strong. I mean, if you look around here, let me get rid of this really quick. You look around, Dow futures are up, S&P futures are up. I mean, we're just, again, near all-time highs or at all-time highs, depending on the index that you're looking at. I have, just to let you guys know, I closed out a lot of stuff overnight. How many of you guys were on the Lunch Money webinar with me yesterday? Anybody on the Lunch Money Lunch Money webinar with me yesterday? If you were, I got short the Aussie dollar. I got long the dollar Canadian, I think. I think I told you guys then, or either I did it or I did it in the afternoon. I got out of those positions, and I got out of the a pound dollar short. So I've been short the pound dollar for the last couple of days. I have gotten out of that position. Do you guys want to know? Take a wild guess. What's the only position that I'm in right now? I'm in one position. One position. Anybody got an idea which one position I'm in right now? Just one. And Nigel, no fair. You can't say that. You were in the chat room. You can't say that. You cheat. You cheat. I am not long the Aussie New Zealand. I am not. I am not long the the Euro Pound. I'm not. I closed it at 85.49 this morning. I literally, well, I didn't top tick it. I mean, I almost top ticked the damn thing. Andrew said I'm in the fetal position. Close. Close. The only position I'm in right now is I bought the U.S. dollar Mexican peso below 850. And if you guys were on the morning edge yesterday, I told you 850 is big support. Right here. It's a 618 retracement right there for those of you that Eric said I got it without multiple choice. You did it, Eric. You did it. The 618 was right there. We were probing just below 850 about, I don't know, about 30 minutes ago, 45 minutes ago, and I don't know if you guys saw the hourly RSI was divergent. I'm like, dude, we're on a 618. I'm like, the stock market where we got turnaround Tuesday today. I'm like, man, if Mutual Fund Monday worked, got us all bullish, then we get turnaround Tuesday today. This U.S. dollar Mexican peso is going to actually reverse here. Remember, we drew this yesterday, so we're here. We were here at 850. I'm like, well, what's my risk? I mean, I can stick a stop relatively close, below the 161% extension here, and really look for a move back up towards 18.8 if I'm right. So yeah, it's the only position I'm in. I locked in all profits in the pound short. And by the way, I locked in my U.S. dollar Canadian and Aussie dollar short positions that I took yesterday afternoon. I locked those in last night in Asian trade. Last night was my kids, my youngest actually, back to school, meet the teacher night. So I was actually at school. At their school last night, and then after their school, I had to go pick up my oldest son over at a friend's house, And as soon as I got home, I closed out those positions. It was kind of late last night. It was probably about an hour before I went to bed. And I closed out that Aussie like right here at 27, I think. Right here. I mean, I got pretty lucky. Pretty lucky in that position. I think it dropped and then it was just hovering down here. That was like right when I got home, and I posted in the chat room that I'm getting out of my Aussie shorts here. I got out of my dollar Canadian longs, and I got out of my pound dollar short at that point. Which, by the way, at that point in time, the pound dollar wasn't very far from where we're at right now. It was like right here. So I got out near here, like at 80, I think. And here we are, basically the same price. But yeah, only trade I'm in right now is the U.S. dollar Mexican peso long, and I got out of my euro pound this morning, and a few things developing, and let's go over here to I can do the pound right now, might as well since we're on it, and then we can just continue on from here. So it's I was talking to a trader, a buddy of mine, yesterday. And he was in a big position, an equity market position, and he was bummed out because this one trade was looking really great. He was short utilities, and it ripped up on him. He ended up staying in, and by the end of the day, he did really well with it. But he's like, "Man, I can't believe this stupid thing ripped up on me." I'm like, it's August. And I was saying to him, I'm like, it's August. This is the time of year where you get major moves, or excuse me, major consolidation, and the moves just don't last that long. So you gotta take profits when you can, and so I'm in that mode right now. I'm just taking quick profits. If I see a nice gain, I'm removing it off my board, and I'm not a big fan of trying to look for huge gains. Although the pound, I mean, obviously shorted the cable after the Bank of England. As you guys know, I was short basically right here at 131.70. Had to sit in it for 24 hours before it moved, and or 12 hours before it moved, and we are at basically a Gartley or near a Gartley low. Now this low, I've been talking with Nick Trades for the last 24 hours about how important this support is. But as you can see, 29.43. This would be the Gartley low and reversal point would be right here. Now, as I was saying with Paul Franco, and I totally agree, it doesn't make sense to be short the cable right now. Now, that doesn't mean if you're short the cable from 131.70 where I was a couple of days ago, and some of you might still actually be short the cable. It doesn't mean that you can't stay short. It's just to initiate a new short trade right now doesn't make any sense. Does that mean that you should go long? I don't really agree with that either. I'm not a, I remember a great conversation I had with another trader friend of mine. Now, he's not even a trader. He's more of like he's a guy that just kind of like, he calls me up every once in a while. Hey, I want to buy I want to buy €500,000. What do you think? And it's like, dude, stick to your other business. Then he's like, I want to sell it. I want to sell 300,000 euro dollar. What do you think? And it's just like, he's kind of like a fly by night currency trader / investor. Just kind of, I think he's more of a gambler than anything. But anyway, so he called me up one time and he goes, what do you think about the euro here? And I go, I said something to the effect of, well, I wouldn't want to be short the euro at this price. And he goes, well, then I should be long. And I'm like, but no, you don't get it. Just because I don't want to be short right now doesn't necessarily mean I want to be long. That's not, being flat is a trade. Being flat in a position is fine. It's, just because I don't want to be short something or I don't want to be long something doesn't mean I need to obviously take the other side of the market. because, you know, when you're trading with like a macro theme, or, you know, maybe like looking at some sort of analysis that says, oh yeah, you should be short. If anything, you should be short. But that doesn't necessarily mean right now is the time to run and be short right at this very moment. And that's how I feel about the cable. It's like, I personally feel that the cable is actually going to 125. But that doesn't mean we can't stop here and create here like I'm just gonna do this like kind of freehand it. That doesn't mean that we can't sit here in a bigger, more massive triangle consolidation for the next month before we finally make our way lower. You know what I mean? So anyway, that's why I'm saying to you guys, look, I think the cable, is a good short overall. I don't know if it's a great short right at current prices. Now that doesn't mean I want to be long at 129.50, but some people do. I mean, and you look at the cable, and well, here, let me write down that support, 129.50, right? 129.45, 1.2945. So, you know, if you're looking at it from a harmonic standpoint, you go, well, you know, I wouldn't mind being long here. I mean, look, this is going to be, and let me remove this really quick, and let me remove that, and let me remove that. Just kind of, I'm removing some of this clutter here. This may be like a really good place to be on the long side, because you know that if you break down, you don't risk a whole lot getting long, all right? I mean, me personally, come on, I'm trying to grab that. Me personally, I'd rather let it bounce and then get short somewhere up here. I mean, personally is what I'd rather do. Rather let, you know, do this and then get on the short side. That's what I'd rather do. Okay, I'd rather sell it somewhere up here, but I may be wrong. I mean, we may break through this low and then I'm going to have to chase it lower. I am fully aware of that, and you got to be fully aware of that too. I mean, if it breaks down, I mean, it's breaking down. There's no ifs and or buts about it. Then we're all going to have to chase it down towards 125. But it's possible. It's possible here, and you know. Anyway, so 129.40, 130 and a quarter. That's what's going to turn. What's going to take the downside pressure off. 130.40. It is bearish, but I'm going to say to you guys regarding the cable, be careful being on the short side right now. Even though it's bearish, be careful being on the short side. There's a good chance that we can reverse. I'm not saying it's going to. I'm just saying that there's a good chance up here it could reverse. All right, now, and that you would have to get on board with the idea that the dollar is not bullish. And I don't necessarily agree with that. Thank you, Kevin. He said, nice analysis on the pound dollar. Thank you. Look, I'm not a dollar bear right now. Matter of fact, I'm a dollar bull. Matter of fact, what I'd really like to do this morning is just what I drew yesterday. All I'm going to do is just move this on over here. What I'd really like to do is I'd like to actually just, what I'd rather do is I'd rather sell the euro on a move up to 111.25. Now let's think about that for a second, because if the euro rallies to 111.25, which, you know, that's our resistance from yesterday, let's just go ahead and write it down, 111.25. If the euro rallies to 111.35 and then it rolls over, what do you think the pound's going to do? Isn't the pound then at risk of doing this? Isn't the pound at risk of rallying and then rolling over and breaking through the support? Yeah, hell yeah, it is. So you have to be really careful that the dollar doesn't just, you know, start to rally again, because I will tell you this: if we break 110.45 in the euro dollar, we break that. The pound's probably going to break that. Right? All right. And for those of you that guessed earlier, am I long the dollar Swiss? No. Should I be? Yeah. Am I not? No. Am I pissed about it? A little. I'm, I'm so irritated that this stupid Swissy, I'm not long it right now. It's just so irritating. Yeah, it's not dipping. Yes, the dollar Swiss looks extremely bullish right now. It looks extremely bullish right now. And I still look at it and keep thinking, damn it, why the hell am I not long the dollar Swiss? You know? It's like, why am I not long? I don't know. Riddle me that, Batman. I have no idea. I mean, I guess wishful thinking is that we dip down here to 97.50, but I think that's very wishful thinking at this point in time. And the fact of the matter is, we're above this 98.30, which we talked about major resistance yesterday. I mean, I guess if we break 98.50, it's gone, right? And no, I'm not long, like a doofus. Yes, we're in a much bigger range. Yes, I keep missing my opportunity to buy the dollar Swiss. Yes, I'm like the worst dollar Swiss trader in the world, it seems, because I can't. Every time I want to buy it, I just never get an opportunity to buy the stupid thing. But anyway, all right, let's go over the yen. The yen, it reversed right where we said it was going to reverse yesterday. No, I did not short the dollar yen yesterday. I mean, should I have? Yeah, but did I? No. 102.70 is major resistance. Support right here at 101.90. And we could end up setting up an inverted head and shoulder pattern here, by the way. Shoulder, head, shoulder. Could. Not saying it's going to. I'm just saying might. 101.90. And then this is 102.70. That's major resistance. We are in a range. Somebody asked me yesterday afternoon on the Lunch Money webinar when we were right here, hey Blake, have we formed a major low in the dollar yen? And my answer to that person yesterday is, I don't know, we'll find out, because it depends if we reject up here or not, and we did. So what's going to be really critical for bulls for the Aussie, for the dollar yen now, is to make sure that we don't make new trend lows. Because if we don't make new trend lows here, and we can have a higher low, higher low, higher low, higher low, if we can have all these higher lows here, the dollar yen is increasing the possibility and probability of making a more significant low at 100. But I'm undecided on what I want to do with it right now. I don't know. All right, let's go over to what am I at? Dollar yen. We want to flip over to the dollar Canadian. Let's go over to the Canadian. I bought the Canadian yesterday. I bought it twice actually yesterday, just to be clear. I bought it once yesterday at 131, I bought it at 131.38, I think, here, and then I sold it at 131 70 or 80. I made I want to say 40 pips, so I think I sold it at 80. Maybe right. Wait, this is a 4-hour chart. Okay. I was thinking that's not an hourly. So I bought it yesterday here, and I sold it here. I bought it here, and I sold it here. And then I bought it yesterday afternoon, back down here. Then I sold it yesterday evening, up here. So I bought it and sold it twice. Now, this is obviously not playing out right now at the moment. This bull flag pattern. Okay. We're sitting there. We had a really strong move, obviously following the non-farm payroll and the Canadian jobs report. Been no upside follow through with the Canadian. And I think a lot of that has to do with crude oil. However, I don't think I'd want to be bearish the dollar Canadian just yet either. So this comes back to comes back to our whole conversation on, do you really want to buy the pound? Because if you look at these dollar pairs aren't bearish. Quite frankly, they look very bullish. And so, and we're at risk here. I mean, the dollar Canadian's really at risk of breaking through this 132. Here, let me just remove that for a minute. We break 132 and it's gone, right? I mean, in all actuality, if we just break this 132 level, it's gonna break out. I mean, it's gonna be a pretty big short squeeze, I would think. So 131, I'll just write down 131.35. Resistance 132. And we're in a range, but we're threatening to turn bullish. I mean, if this thing really wants to turn up the heat, we start breaking higher. And that's why I think it's really risky being too bearish the dollar at this point, because the dollar just doesn't look bearish. It doesn't matter what you're looking at, it doesn't really look bearish. Okay, I'll be back in a few minutes. When I come back, we will continue on, guys. Don't go anywhere. We got the Aussie, the Kiwi, dollar index, peso, Nordic currencies. Be right back. All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. Let's go ahead and get back to it. Let's go over to the Kiwi. All right, so I am not, just so you guys know, I'm not long Aussie New Zealand. I was thinking about it last night too. I was really, we were at like 106.88, I think, last night, and I was looking at it going, man, we were right down here. And I was like, man, I'm thinking about buying the Aussie New Zealand, and I didn't. So I didn't buy it. We are back, up towards those highs. But anyway, here's the Kiwi. I'm not really sure what I want to do with the Kiwi. We have the RBA decision tomorrow, so just keep that in mind. Not RBA, RBNZ, excuse me. So because the RBNZ is tomorrow, I'm not really super excited right now about trading the Kiwi. All right, if you look at the daily, we're kind of mid-range. You have to imagine everybody's expecting the RBNZ to cut rates, and if you think about their last meeting, I mean, it was like by the way, last meeting for the RBNZ was the only RBNZ meeting I've ever actually watched live in all my years. I actually watched Wheeler and his assistant, and I was like, I was in awe listening to those guys. I'm like, how can you guys be this ignorant and so just oblivious to the slowdown happening in Asia? I was like, I just didn't get it. And then they decided to keep rates unchanged. And then later that night, the last meeting, China posted GDP numbers that were just horrendous. They were like 0.3% worse than expected or some crap like that. And then a week later, the RBNZ says they're going to have a secret meeting, or a special meeting, not secret, special meeting, like surprise special meeting. And now everybody cut rates. And just their last meeting, just before that Chinese GDP number, they were very, they didn't even mention China. They didn't even mention, slower growth in China. And now obviously everybody's looking for them to cut rates. It's like, you talk about the most clueless central bankers out there. I would venture to guess that RBNZ is like right up there. Okay, as far as when I say clueless, they are so reactive. They're not they're not proactive. They are reactive central bankers. Now, that makes them extremely volatile, and then that makes them extremely unpredictable. So, just because I say clueless doesn't make them right or wrong. It just, or makes me right or wrong. It just makes the situation much more dangerous to be trading around. And that's where my skepticism about the RBNZ comes in, and trading the Kiwi right now. Because frankly, they could cut rates and then say, then that's it, now we're done. And the Kiwi could spike up towards 74 cents right afterwards. The flip side is they could, cut rates and then start talking, very dovish talk, and, we could be right down here at 67 cents. So I'm not going to pretend like I know exactly what they're going to say, because I sure as hell don't know what they're going to say. Because obviously they don't know what they're going to say. Therefore, it makes it a very dangerous situation to be trading. Does everybody understand that as far as the Kiwi goes? Understand what I'm saying and why? All right. I just wanted you guys to know why that's why I'm very not comfortable being long the Aussie New Zealand going into this, because they could be one and done. Cut rates. They could actually choose not to cut rates. And if they choose not to cut rates, the Aussie could rip right up to 74 cents too. Okay? Kevin says, even if the RBNZ cuts rates, they are still the most attractive interest rates available. Yes, but you have to think about expectations, and if they're cutting, and and they may still cut. Now, Kevin, you can go back 3-4 years ago and listen to this webinar and listen to a recording, and you'll hear me say this: every central bank is eventually going to ZIRP. Now, I didn't think so many central banks would go into negative interest NERP, but the New Zealand may have attractive rates for now. They've always had a 3% premium on top of U.S. interest rates. Right now, it's way less than that. Right. So if they signal that they may continue to lower rates, and maybe even bring them down to ZIRP or their equivalent of, I mean, you never know. It's all about expectations from here. So that's why I'm just not comfortable trading the Kiwi right now. So what do we do? I mean, I would say, you got a lot of support down here. Okay, right there, probably 70, whatever it is. Maybe 70, 60. Resistance is 75, 72, 60, and I think you just stay away. Well, I am. I mean, you guys do whatever the hell you want to do, but I mean, I'm just staying away right now. Ahead on tomorrow. As much as I really want to be long the Aussie New Zealand, I can't take on that risk. And you can't. Just one other point I want to make. You can't take on a lot of risk right now. Why can't you take on a lot of risk right now? And no matter what you're doing, why can't you take on a lot of risk right now? Why? Yeah, it's summer trading. It's too illiquid. The chances of getting an explosive move in one direction is much more difficult in August. To get an explosive, huge move one direction or the other, it's really hard to get. So if you get caught on the wrong side, on an explosive move, it's really hard to make back that money. Like when you've got normal volatility, and like let's say it's just a normal part of the year, September, October, whatever, you have the same conversations that we're having right now in December. But you know, if it's a normal time of the year, there's a lot of volatility. So if you take a hickey, you know, there's going to be other opportunities to get it back. Um, but you know, chances are. But if like let's say you're short the kiwi and they don't cut rates, and it looks like they're not going to, the kiwi jumps up 150 pips. Good luck trying to make another 150 pips in the summertime. You know, you'll be searching high and low, and you're gonna spend the next several weeks digging yourself out of that hole because it's too hard to make 150 pips in one fell swoop like that. Okay. So anyway, um, so that's the last point I want to make. DAX broken a new highs. S&Ps are moving. Yeah, market's strong, guys. Market is strong. Um, here's the Aussie. Now, as I point out to you guys already, the Aussie, I'm looking for a move towards 77 cents. This is, just so you all know, this is a bullish wedge. Don't think otherwise right now. This is a bullish wedge. Higher lows, consistent highs. 76, 73. Big resistance. Support right now. I would just say it's 76. Now, if we pop higher to 77.15 right now, it's possible. That's where I'm selling the Aussie, just so you all know. What was it? 76. Okay. This is, as we talked about a little bit earlier, this is a big triangle formation. So if we get an opportunity to sell up here at 77.15, 77.20, I'm going to take it. And we could get it. It's possible. It is possible. All right. Dollar index. Yeah, that DAX broke higher, broke through resistance, just squeezing higher. Here's the dollar index. Okay, so with the dollar index, we have this inverted head and shoulder pattern, which still has some room to go. Six 1/8's at 96.60. The completion is 96.65. I'm going to write that down. 96.65 is the inverted head and shoulder pattern completion. We're still in a big range, though. Just, you know, if you look at the dollar, we're just in a big range. We're just, you know, almost mid-range. Actually, almost mid-range. Support for the dollar. Now look at that peso, by the way. It ran up to 1855 and all the way back down to 1850.50. It's like can't get any follow through. No follow through. It's tough. You know, this time of year, guys, is really tough. You just got to be extra careful. Dollar index. I mean, I'll write down support to be in 96.10, but it's not great support. Speaking of the peso, here's the peso. I bought it this morning below 850. It's on it. I bought it down here. It just rallied like 500 pips and just slumped again. But you can see this 618 of this move. And I was going to say and something else, but never mind. All right, so there's a horizontal support right here. 1849. The lows here, 1849. So I have to write that down as support. Okay. Resistance, 1860. Because if we break 1860 right here, if we break 1860, that's going to take that downside pressure off. And just so you guys know, if we break that 1860, that means that the market's coming under a little bit of pressure, risk aversion. That has to happen in order for us to break higher. I mean, one of the reasons why it just came right back down is because stock equity market futures have come down. This isn't a range. All right, let's take a look at the Norwegian krona. Hey, guess what? We're going to have to write down the same prices we've been writing down forever. Wait a second. Down here at 842. I mean, resistance today is it's going to be here 1847. Or 847, sorry, not 18, 847. We're in a range. US dollar, Swedish krona. Nothing to do here either. I mean, really, there's nothing to do at all. I mean, I will write this down, though. Instead of 840, I'll write down 850 today. 850, and then resistance, obviously, at 870, 874, but... Okay. Your bias chart is done. It's finished. Take a picture of what we're gonna do. All right, guys. There's nothing happening right now. Yeah, nothing happening.